I acknowledge the traditional custodians of the various lands on which we work today and the Aboriginal and Torres Strait Islander people participating in this webinar. I pay my respects to elders past, present and emerging, and recognise and celebrate the diversity of Aboriginal peoples and their ongoing cultures and connections to the lands and waters of New South Wales. Well, good afternoon, everyone, and welcome. And thank you for joining our ENFP webinar. I am Kim Kelloway, Head of Clients and Markets at HLB Mann Judd, and on behalf of the ENFP Strategic Alliance of the Not-for-Profit Specialist Team at HLB and Commonwealth Bank Yvette Flynn Relationship Executive, Major Client Group, we welcome you. Today we are presenting the results and findings of our financial management survey, and I would like to thank all of those that participated in the survey presenting today. Here are a few of our not-for-profit specialist team from HLB Mann Judd. Aidan Smith, Partner, Audit and Assurance, and Head of Not-for-Profit HLB Mann Judd, Australasia. Fiona Dixon, Partner, Financial Transformation. Eric Canbery, Outsourced Finance Manager. And we have a guest presenter, Baidy Laffan, Head of Customer and Growth at Yellow Canary, Australia's fastest growing reg tech company. Baidy is an executive and workplace compliance specialist with over 10 years of experience with ASX 50 companies, Australia's largest not-for-profits and retailers. Previously, she was the National Head of Workplace Compliance and a partner at a professional services firm. So over to you, Aidan.
Thank you, Kim, and welcome everyone this afternoon. Great to see so many of you here and hopefully face-to-face in the near future. Now, I'm going to give a brief overview and just talk about obviously the importance of financial management. If any organisation doesn't have the resources to enable it to meet its objective, then it won't be able to meet those objectives and it might not even be able to remain solvent. So it's pretty important that financial management is seen as a priority. In addition to that, if an organisation becomes insolvent, that could mean that those charged with governance, the responsible persons in a charity, directors, etc., could actually be personally liable for trading when insolvent. So there's so many reasons why financial management is really critical. Now, the term not-for-profit is an interesting one. Indeed, whether it's the correct terminology is a debate for another day. But being a not-for-profit obviously doesn't mean you don't need to generate a surplus. Okay, you need to do so you can continue to invest in the business, and that's just to keep your head above water. You can't stay still. You've got to keep investing. To invest, you obviously need money, and to generate money, you need good financial management. And that's what we're here to talk about today. And of course, there's always the additional interest in how not-for-profits do spend their money, because especially if it's sourced from the government and the public, people want to know. So I think it's safe to say that sound financial management isn't one of those nice to do options. It really is a need to do. And then, of course, we've got COVID that was thrown into the mix in the last 18 months or so. Many cases that didn't help. The not-for-profit sector wasn't immune to the impact of COVID, and especially when, many of you already run in a very lean manner with limited resources. There was a number of charities who saw the increased demand due to COVID, and then sometimes a decrease in funding as well, where there was events, conferences, donations, just all decreased. It's pretty much a perfect storm, I think. And what that meant is lots of organisations were actually expected to disappear. That hasn't been the case so far, thankfully. But we're not out of the woods yet, and there still is a lot of uncertainty. So in this survey, what have we done? We've surveyed more than 70 not-for-profit leaders on financial management. That was our range of different organisations and different charities. And what we're going to do today is go through some of the main findings, and the full survey will be sent to you all in the near future. Okay, so if we go into the first survey question that we had here, and it was how's your survey funded? Now, how does the screen work? If you've got the blue along the top, what that's telling you is the percentage of responses. Okay, so what we had, if we look at revenue from government, we said 22% of people said they had no revenue from government. Okay, that's what that means. And then you've got 24% of our respondents said 1 to 20% had revenue from government. Okay, and so on. So what does this mean? Well, the good thing is that means there's a very diverse revenue source, revenue range of income for the sector, which is good. You look at government, look at grants, revenue from the government, that represents at least 40% of income for around 40% of our respondents. Okay, and if you actually look at where the larger numbers come in, like one's over, let's say 30%, it's in that 1 to 20% range. So what that means is that up to 20% of our respondents said that they had 39% of revenue from donations, 45% revenue from goods and services, and 63% revenue from investments. So that's the higher end of what, if you want to get a range of income, that's showing that it's a lot from one source, but that's a fairly low cross section of our respondents. So that's good. Now, next thing we want to look at is then how entities measure their financial performance, and there's a bit of a range here as well. Now, 30% look at budget to actual, and I think that's a really, really good one. And we think management's critical here. The value's increased when there's a detailed and robust budget setting process, and you've got buy-in from different stakeholders and approval for the board. I'll let you into a little audit secret here. All right, we don't usually tell our audit secrets, but you guys are going to share one with you. One of the very powerful, easy audit tool that we look at is to look at the performance, the actual against budget. We do that when we're asking questions of management. We ask questions of management. Sometimes if you ask a yes/no question, you might get a yes/no answer. Management might forget about something. But if you look at the budget, what was budgeted, and look at the actual performance, you can ask the question, why is it different? And then sometimes that's when you find out something that you might not have been aware of, or might have been not told to you before. Okay, and it's a great tool for boards to use as well. It can be used just to check what's happening and if it's happening properly. Do management actually report on this as part of their board reporting? So as fees from services increase 50%, what's the reason for this? And it's also good for performance management. So management doing what they're doing and said what they would do. It's much easier to monitor that if you're looking at budget versus actual. So it's a very useful tool. And it's good that a number of you are looking at this. Then we've got revenue growth, and that's interesting given the diverse range of revenue we saw on the previous slide. I think it's important that revenue growth and diversity of that revenue is seen as important. Then you look at the others, there's a bit of a drop in the respondents there, but it's interesting nonetheless. I mean, not-for-profits are no different from for-profits. If customers aren't satisfied, if they've got an option to go elsewhere, they will go elsewhere. Okay, and today's environment, there are much more options than there were before. Now, I mentioned earlier about the effect of COVID, and then what we'll talk about now is we surveyed we've surveyed what people thought the impact of COVID was. So if we go on to the next slide, we'll have a look at that. So has COVID affected your financial performance? Not surprisingly, the majority said no, but it's 55%, so it wasn't overwhelming. 21% said it was actually positive, and 24% said it was not at all. Now, it's interesting that when you look into the reasons for that, there's a number of reasons, diverse reasons. There's JobKeeper had an impact, but there's also been increased demand for additional services, like some mental health, counselling, community housing, homelessness organisations, just to name but a few of them. Okay, some organisations actually received some additional funding to help them provide services. Some diversified their revenue streams. Okay, but what I think is important when we're looking at this is that this is just in a particular point in time. We don't know what the future holds, including the ongoing impact of COVID. In touch wood, that's the worst of it over, but who knows? Because there's also the impact that I think a lot of organisations deferred expenditure to a future year. So COVID might not have an impact now, but it could have impacted the future with a lot of services that have been deferred. So does the organisation have the resources, that's both labour and financial, to be able to deliver on these in future? Next question we looked at is in relation to cash reserves. And this is one that's been a hot topic for a number of years. And we've had many people that have asked us the questions about this in the past and say, what's the ideal cash reserves that should be held? Now, what this shows you is that the majority, or 44%, of people went 12 months plus. Okay, so that's 12 months with cash reserves. I think that's changed a bit over what it would have been pre-COVID. COVID has had a big impact. Okay, and you can actually see that in the second question there, when 30% of people said that COVID impacted the cash reserves negatively. So it is diverse, and it is a question people ask. Charities might not want to be seen as stockpiling cash. The public might question this. The regulator might come along and say, well, are you using your assets for a charitable purpose? But I think that what is interesting is that the 12 months plus is such a large percentage. The impact of COVID has, I think, had a lot of not-for-profits looking at their cash reserves and questioning whether they should be holding any more for a rainy day or to cover unexpected costs. Another event such as COVID. or to invest in technology. Fiona's going to be talking about technology soon. But if you want to continue to grow or just keep the head above water, you've got to invest. And to do that, you need cash. Sometimes you're hit with an unexpected cost. Baidy's going to be talking about payroll shortly. Payroll is one that we're seeing has been more and more common. With the complexity of awards, it can sometimes come out the woodwork. What if an organisation does have something like that and it has to go and pay back employees and former employees over a period of time, does it have enough cash to deal with that? So it's really, it's something that the ACNC published something fairly recently about reserves. And again, it comes down to, it depends, right? There's no silver bullet here. There's no answer, but it is important. It's part of the financial management. We talked about the budget earlier, looking at the budget versus the actual. It's really important to look at that and look at what you have some allowance for those contingencies, and then look at what you think that you should be keeping for those rainy days. Okay. Now, just speaking of payroll, that involves people. Now, people are resources, and that's a wonderful segue by me to our next speaker, Eric Canbery, who's going to talk now about the findings of our survey in relation to resourcing. So, Eric, it's over to you.
Awesome. Thank you very much for that, Aidan. So let's do a quick survey to see how many of you are active on this session and can respond during this lunch period. Now that we are in November, out of lockdown for a period of time now, how many in your organization still have your finance team working remotely? So it's just a yes or no question. Yes, if they're still working remotely, or no. That's pretty much it. 94%. Wow, that's very, very interesting. Because based on the NPS survey, it's actually 88% has had the team members working remotely. So that means that there are more people on a percentage base granting the flexibility of working remotely to their staff members. That's an interesting result. Well, what has certainly been a challenge for the 2021 financial year is that it was the first full year, if we think about it, where the majority of the time was conducting finances remotely. So many stopgap measures and processes that may have been introduced in or around March 2020 should actually now be tested and reviewed. What may have been a lean team previously is now being challenged by new processes that have been thrown together. But these half processes or band-aid solutions were only meant to be temporary back in 2020. And now we're almost at the end of 2021. Unknowingly, you may have kept up these inefficient processes, and this can actually increase either risk of fraud or simply exhaust your finance team. Besides the process issues affecting finances, there is also the resourcing issue from staff. As we know, hiring any staff, let alone any good staff, is very difficult as we go through this so-called Great Resignation period. Hence, resourcing is a critical area to focus on when trying to keep your financial operations ongoing with staff that are either coming or going along. From the survey responses, it is interesting to note that for some organizations, besides the traditional in-house staff members, some have also chosen a pure external provider or hybrid of both in-house and external providers to support the finance function. Besides the negative impact of COVID to the financial performance overall, and the financial reporting and regulations that continues to increase in complexity, I mean, how many have reached out to your accountant to seek clarity when JobKeeper was first released? Hence, when asked in the survey if leaders have considered to outsource some areas of the finance tasks, these are the top 3 tasks that were identified. These can sometimes be niche, yet still important and complicated areas for the organization to maintain. Hence, seeking external assistance on these areas would be a good complement to the existing team. This allows the organization to scale up the capability of the existing finance team by utilizing the external resource support that isn't quite a full-time resource, and hence can ensure that the finance team is not being stretched too thinly across all the various functions necessary. This leads onto the case study that I want to discuss about. And this is a live example that happened last year. So what happened was there was an in-house finance manager that left the organization due to personal health reasons. As a result, the finance team was struggling due to the lack of finance leadership. They didn't know how to prioritize the day-to-day work. High-value donors were not getting their personalized donation receipts. Employees were not getting expenses reimbursed. And obviously during the COVID lockdowns, there were different days and reduced days being worked, and this wasn't being reflected properly on the salaries, of course. Needless to say, board reporting was not conducted on a timely basis, and accuracy was obviously being questioned. This is when HLB was approached, and we came in as an outsourced finance manager, or CFO initially, as the CEO needed some financial guidance and leadership back into the organization. So we spoke to the fundraising and donation team about the high value donors. We spoke to the employees about the expenses that were still outstanding. We obviously spoke to the finance team on what the current processes were and what stopgap measures were already in place. We spoke with the CEO on the board requirements and what the areas of concerns needed to be addressed and the importance of each of them, of course. As a result, we communicated to all the various stakeholders on the internal improvements being taken, the timelines that would be required, and the expectations going forward. Being so intimately involved with the day-to-day finance operations of the organization, HLB obviously fixed those outstanding issues slowly. We're not going to say we fixed it all in one go. And now HLB is engaged to assist with a full finance function and is now integrated with the rest of the team. Hence, what we've demonstrated was a mixture of the in-house team members working with external providers to create a more of a hybrid solution. Of course, this case study was born from the sudden changes in resourcing and staffing issues. If, however, you are finding that your team is going well and you need a more holistic review of your systems, processes, and technology, then I would like to introduce you to Fiona, Partner of Financial Transformation, who can elaborate more on technology improvements to meet your organization objectives. Fiona.
Thanks, Eric. It's great to be here today speaking with all of you on one of my favourite topics, technology. To start us off, we have a polling question that will appear on your screen shortly. So what is stopping you from investing in new technology within your organisation? Is it lack of necessary skills, a lack of resources, a resistance to change, you like the way you're doing things at the moment, or is there some other reasons that are stopping you? Okay, lack of resources. So interestingly, the World Economic Forum has been looking at this issue as well in terms of the future of job. And in the organisations that they interviewed, the primary reason was lack of necessary skills because there is a skills shortage in the digital space. So it's interesting to see the diversity with this group. As we all know, COVID has had a tremendous impact on many aspects of our working life. One of the key areas that has crystallised for us is our use of technology. Organisations are currently using technology to support their employees, keep them connected, and also enable them to work seamlessly. It's pleasing to see that 91% of the survey participants recognise that technology is going to be a key factor in enabling you to meet your strategic priorities going forward. In our experience, the traditional expectation from an organisation is that once a finance system is acquired, it's a set and forget mentality. For those of you that have already moved to a cloud-based system, you may have noticed this is no longer the case. There are many regular updates of new features and capabilities that are released by cloud providers compared to the server-based providers. With a cloud-based system, there are a plethora of options for add-ons, which will allow you to improve your efficiencies and effectiveness of your processes. When we reviewed the survey responses, we noted that a key risk facing many of you is loss of corporate knowledge and inexperienced staff. Documenting your processes can help to reduce the risk of this loss of corporate knowledge, especially with the anticipated great resignation wave that Eric alluded to earlier. By adopting the mindset of continual improvement in your finance systems, whether that is tweaking the way you do something due to a new feature that has been released or bringing in an add-on, it allows your organisation to continually build on that corporate knowledge and to increase your efficiencies. From the survey, we can see that some of you have already started investigating cloud-based systems, RPA or robotic process automation, and OCR or optical character recognition technology. For those of you that are not sure what that is, the OCR, it's a technology that, for example, can read invoices and process them in your finance system, which can be quite effective. There's currently a drive towards RPA, and with the current staff challenges facing organisations, it can be quite a useful technology to adopt. We have a video to show you of our not-for-profit digital employee, Hope, who you can see on the screen at the moment, who will talk to this a little more.
Hi, my name is Hope. I am a not-for-profit digital employee here at HLB Mann, Judd. You might have heard of UiPath, Automation Anywhere, or Power Automate. They are tools that enable users to automate various parts of their business processes through what is called robotic process automation, or RPA. These providers are making automation easily accessible to organizations through low to no code software. At HLB, we currently use Power Automate, which is a Microsoft product included within the Office 365 package to create automation of various processes within the firm. As such, to achieve automation within your organization, it doesn't mean that you have to invest heavily in automation products. A lot of tools are readily accessible to your organization and are a cost-effective solution for your automation needs. You may ask, what benefits can I achieve from automation? Well, automation means that your employees will be spending less time on administrative tasks, and instead, will have more time to focus on the organization's mission and strategic priorities. Automation is not intended to reduce the workforce, rather, implemented so that your organization has more capacity to meet its strategic priorities. What can a digital employee like myself do for your organization? I can update databases and spreadsheets, generate reporting, download reports and documents from websites, write and send correspondence to donors, members and sponsors, prepare end-of-month work papers, and much more. Introducing automation into an organization can be a big change for employees and needs to be carefully managed, which is something HLB can assist with. By integrating automation into your strategic priorities, you can create time savings for your employees to focus on accomplishing the organization's goals.
Thanks for that, Hope. So hopefully you found that interesting. I guess just something a little bit different to break up all of us just speaking. In the final section on technology, I just wanted to go through a case study on how we use technology to assist one of our clients. So we had the pleasure of working with an organisation that unfortunately has lost some key finance staff. It was quite a small finance team and they were working on quite a large server-based finance platform. They weren't necessarily using all parts of the system, rather just the ones that they had been taught to use or shown to use and used on a daily basis. The team was spending quite a long time with accounts payable, whether that was entering invoices into the system, filing the invoices once they had finished because it was all paper, searching for an invoice when someone was querying an invoice or whenever they received an update to it, or if the auditors requested copies. Their server-based system was due for an upgrade, and we suggested moving to a cloud-based software instead, which was cheaper than their current software and provided them with the features that they were looking for already included in the price, which was quite beneficial. We assisted them in implementing the system, including transferring the data and training them on using the system. We also implemented an OCR accounts payable system so that they could push the invoices through from their suppliers automatically. They also had challenges around invoice approval. So we assisted with identifying and implementing an approval system that also worked with the cloud-based software. We worked closely with the team, and once we'd finished with implementing the new technology, training them on how to use it, and documenting the processes, on average, we'd saved them about one day a week that they were able to use to pursue their strategic priorities. So I guess that's just one example of what technology can do for an organisation, especially if you're struggling with resources. I'll now pass over to Baidy from Yellow Canary, who will talk to you about payroll compliance. Thanks, Baidy.
And thank you, Fiona. Payroll compliance, it's not the most exciting of topics, but is certainly the one that is going to have the biggest impact, particularly in the not-for-profit sector. I want to start off with a question. So have you implemented an ongoing payroll compliance program involving audits or other forms of verification? Yes or no? Because I'm going to get into that in this particular presentation. And while we wait for those poll results, it's been a big week for the not-for-profit sector, particularly in the context of payroll compliance. Okay, so touching on those results, we've got 35% for yes and 65% for no. So that's quite an interesting mix, and it's good to see that 35% of this group have looked and considered and kind of gone forth to implementing that ongoing payroll compliance program, because what we're going to talk about today is tricky. Industrial relations in Australia is complex. We've got over 7,500 current enterprise agreements across Australia. We've got 10 employment standards. We've got hundreds of modern awards. We've got a whole host of state-based and federal legislation, all that not-for-profits are subject to. And in our survey, we touched on a number of these different areas, and we saw that 15% had some level of wage underpayment issues. Around 50% hadn't undertaken any audit, though 85% believed that they didn't have an issue, despite not necessarily having conducted those audits in the first place. Interestingly, though, 50% hadn't had the position descriptions reviewed to ensure that employees were classified correctly. And there's about 30% who use systems where employees can actually claim for their own entitlements like allowances or overtime. And that classification piece is one we're going to get into today, and it's particularly topical in what we've seen in the paper with the Red Cross. In our experience from a Yellow Canary lens, where we do payroll compliance day in, day out, of the 42 compliance reviews that we've done in the last 18 months, every single employer, whether they're a retailer from 100 to 55,000 employees, whether they're in the banking or financial services sector, whether they're in the not-for-profit, whether they're in aged care, medicine or resources, they've all had some level of non-compliance, which is equal parts frightening, because we're talking about, in some cases, the most well-staffed and well-resourced organisations through to those that have much more lean operations. Today, I'm going to chat about the two main areas that is most challenging in the not-for-profit context. And the first one is employee classifications. So the challenge here is that this week, we've seen that the Red Cross were dragged over the coals by the Fair Work Ombudsman for an underpayment. So this particular underpayment occurred between 2012 and 2021 and resulted in an underpayment of more than $22 million to staff within the Humanitarian Services Division. The key driver of underpayments in that business resulted from employee classifications or award classification. What that means is, in that context, they had said that they were either applying the wrong award or the wrong enterprise agreement to employees, or saying that they were award free when they were in fact award covered. Or the scenario that we see most commonly is that they might have gotten the right award or the right enterprise agreement. However, the actual title within that or level within the agreement was the wrong one for that employee based on the roles that they were doing. And the problem with this is that it's dynamic. So you'll have job titles changing over time. So one employee may start doing that particular job and their classification was correct. But to some of the comments Fiona made in the previous presentation, the way finance teams and all teams are changing and roles are therefore changing. So what may start as, okay, this particular manager in this part of the business is this level. However, that was based on a role description 10 years ago or 5 years ago, and that may just not be current anymore. And that's where we've seen the red cross get tripped up. It's also really common where you may have, and we've seen this as recently as yesterday in a review we were doing, 2 employees undertaking the same role. Let's just say they sit next to each other in the virtual office and they have different classifications for the same role. Which is problematic in itself because you're inherently going to have underpayment, but you're only going to know it when you actually go and understand, well, actually, do I know what this role is doing and have I correctly mapped this? The other place that we see really commonly within the for purpose and NFP sector is acquisitions and mergers. So it's been so common for either amalgamations or acquisitions, and you'll just adopt the existing levels or classifications for the employees that you bring on, and unknowingly those may not be aligned with what they actually should be paid. And then you just have inherently tricky awards, that particularly those that are really, really common in the sector, such as the SHADs or the social community award, where you will have multiple different types of classifications and different levels within that. And it's just so hard to get it right without advice. Some of the things you can do though is undertake that mapping exercise, and I appreciate it's never at the top of anyone's list when there is so much going on, but it is one that will pay dividends by undertaking that mapping of here are all the classifications, here are the roles, and then actually going back to assess, is this the role and the duties that this employee is doing, and just making that assessment. The next one we see, and it's something we call self-claim systems, is where an employee, typically where you may have staff paid on auto pay or salaries or working in your contact centers, is that employees may be able to claim for their own overtime or allowances, which is great because it streamlines processing. It means that you don't have to physically have overtime approved and then have this issue around it being submitted into the payroll system, and it's never on time and the timesheets are never signed off. So you just get them to claim it themselves. The issue we see here is that we're relying on employees to correctly enter their own entitlements and claim for those in what's inherently a really, really difficult thing to interpret. So we've seen issues where an employee may claim, rather than their 2 hours that they've worked overtime across the week, they may just say, all right, well, I might just claim that all in one go and claim my overtime for the month and put through my 20 hours of OT. The issue there is there's a whole host of rules around the rates that should be paid at. So anytime we see self-claim, it's almost impossible to get right. So it really needs the rigor around that, or as 35% of you are already doing, having that ongoing compliance piece overlaid over the top to just make sure and essentially verify that those payments are correct and in accordance with the award or instrument and the hours worked. And Kim, I'll now pass it over to you.
That was excellent, and I'd like to thank our presenters. So in terms of some questions, I've got one here for you, Baidy. What about employees being paid above the award?
Oh, this is a really, really good one. This is probably one of my favorites. So I'm going to make an assumption in this answer that they're paid above the award, but they've got an underlying award. One of the tricky parts in this scenario is where they may work additional hours, or where they may be required to work a shift. So an example I'll give is that there's a not-for-profit that we've worked with, and they have a contact center. So they have people calling up to organise home care visits. They have the whole kit and caboodle going to this contact centre, and they've got people working shifts. So there may be some people that work the morning, there may be others that do the afternoon, and others that do the evening. And they've all just got a paid above award arrangement. So they're paid on that basis. The challenge is under the award, depending on the times of day that they're working, those 3 different groups of employees are entitled to different shift loadings. So what we typically see here is that the morning staff may be fine because the paid above award arrangement is likely sufficient to cover the award. The challenge we see is those that are either regularly doing the afternoon or night. It's often not called shift, but the afternoon and night times, what they would have been paid under the award is nudging really, really close to what they are being paid at that above award rate. So you'll often see underpay, even though you're paying someone above award, you may actually have a situation of underpayment just because of them working times of day that attract a higher rate. And that's where we typically see people get tripped up when they're being paid above award.
Thank you for that. For you, Baidy, how to decide which award to apply and whether employee is award free?
Those are really challenging questions. So that is where it's best to get, if you don't have in-house advice, in-house either HR or legal support, if you do have external support, because they can what they would need from you is just the understanding of what's the industry that you're working in, and then what are the duties that those particular employees are working on, so that you can get a piece of advice around that. Because what we see is that having that advice documented pays, particularly if there's ever any pushback from a regulator around how you've classified those employees.
Thank you. Next question again is to you, Baidy. How does till sit with overtime?
Heather, if you want to clarify on this question, because there are cases where time in lieu, so an employee may work overtime hours, but they may be remunerated for those hours worked rather than being paid overtime. They may be given time off in lieu. So we do see those 2 different approaches, and the key really is in the documentation of that and the record keeping in the system.
So I think Heather's just come back with employees often take time in lieu till instead of time in lieu.
Yeah, so employees taking overtime instead of that time in lieu. So absolutely. So the key there is where they're accruing the time in lieu, document it, preferably within the payroll system. And when they're then taking that time in lieu, it's also then recording that through the payroll system so that there is that end-to-end record keeping process.
Okay, thank you. And this one's for you, Fiona. So what are the top 3 challenges in terms of undergoing digital transformation from your experience?
Yeah, so I touched on this at the beginning of the my talk, I guess, in terms of what you're finding as the challenges. What I've seen is probably the skill set at the board level and the interest of a digital transformation at the board level or at the senior level of the organisation. We find that we need to use that to drive it down and to actually put resources and an investment behind it. So that would be the first one. The second one would be resources. So whether that's labour in terms of staff or employees that have that skill, or bringing in consultants, or simply having the time to be able to do it as well as doing business as usual. And then the last one is change management. Digital transformation can be really scary and can be quite intimidating for a lot of organisations, and a lot of change management needs to be applied to make sure everyone comes along on the journey and you're not really scaring anyone off too much.
Thank you. And this could either be to either Eric or Fiona, are there any financial solutions that you would recommend to medium-sized charities? Would ERP is a good fit, or bookkeeping solutions is sufficient?
By case basis, I mean, it's too hard just to pigeonhole, or medium size equals to this. It will definitely need a review, a sit down, discuss about how you're currently doing things what are the outputs you're trying to achieve, so we can determine what would be the suitable solution for you from that. So I'm sorry I can't give you a definite answer on that one, because it's too easy to pigeonhole people into a particular software accordingly.
So we might just we'll move through. There are our latest newsletter, which is the For Impact. I just wanted to bring to your attention 2 of the articles in this publication, which is due out shortly. And thereon, the first one is the Director ID timeline and the deductible gift recipients. So the DGRs must become registered charities. So I recommend that you share those and this particular publication with your board and your teams. So as part of our ENFP community, sorry, I've just lost mine. As part of the ENFP community, we would like to provide you with a complimentary business review. So please indicate your interest on this question, or feel free to contact me after the webinar to review the resourcing, which is the finance function, the review technology, financial transformation, payroll compliance, the ongoing payroll compliance, and anything else. So I might just leave that up there just for the moment. This now concludes our webinar. The report plus the recording and presentation will be sent out early next week, as well as being uploaded to the ENFP LinkedIn community group. Our ENFP program for next year will be delivered as a combination of face-to-face and online webinars, and our year will kick off with an update from the ACNC in February. So I'd really like to take this opportunity to wish you and your families a very Merry Christmas. And let's hope that 2022 brings back a bit of normality to our lives. And I'm really looking forward to seeing you all again face to face, and hopefully that will be early next year. So thank you everyone, and that concludes our webinar for today.